So with that, Grover Norquist joins us, Americans for Tax Reform President. I think we played that clip from Hillary Clinton just to see if you'd get annoyed, Grover. Truth be told, it was just a little TV trick. Was it effective? What do you think? That is the line of attack here, that somehow this is not going to help the middle class. It's just for the rich. And meantime, we've talked to a number of so-called rich people today who say they don't like the plan. What's the truth?
Well, this is what Hillary Clinton and Bill Clinton and Obama and all of the friends on the left say about any tax reduction. It does. I mean, it's already written, and they just sent out the press release, and you begin to wonder whether they ever read these pieces of legislation. So we should expect that. Now, this made sense as an attack 2 months ago, a month ago, even a week ago, hoping to defeat it. Here's the problem. The bill has passed the House and the Senate. They're very close together. I mean, there are a lot of little differences, but, you know, one said 5 and one said 7, and you can see them coming together on an agreement within a matter of a few days and getting it done this month. So why say stuff like that when in a couple of months people will be able to look at their own paychecks and see that they're not paying as high taxes? Right. They'll be able to look at their 401k and notice that it's worth more because we're no longer beating companies to death, both here domestically and internationally, and they'll be seeing neighbors getting jobs. So here's the problem. That talk makes sense to try and stop the bill, but at this point, they sound like Baghdad Bob. I mean, they're just ranting, and it's not stopping anything.
Yeah, the differences between the bill, to your point, we'll put those up on the screen, and you're right, they're most likely going to come together in the House and the Senate and resolve this, the 4 brackets versus 7, where the AMT is in or out. Is there one thing in there, though, on the specifics, one thing that you would like to see either stay or go that could be negotiated in this conference committee? What's your focus? Yeah,
both pieces of legislation, both bills, give you a permanent 20% tax on businesses. Right. But the Senate waits a year. And I think that it's always dangerous because even though it's in law, it leads to uncertainty. Is this really going to happen? Who knows what happens in a year? I think it would make a lot of sense to make the 20% take place immediately. Remember what happened when the Democrats insisted that the Reagan tax cuts, which began in '81, but didn't fully phase in until 1983. When did the recovery start? January 1983. Why wait? Let's have a recovery and growth now.
That makes sense. So do that quickly. And that is really what this whole thing has been built on being a corporate tax cut. Before I let you go, though, Grover, on the individual side, once we get to, say, the midterms next year, are the Republicans on safe ground, do you think, running on this plan? Or will there be some of their constituents coming back to them and saying, you know what, I thought I was going to get a tax cut, and in fact, I think I'm paying higher taxes now. Is that a risk?
No, I mean, there may be some odd cases of that, but in every income group, it's an overall significant tax reduction. And again, it's tax reduction and increase in asset wealth, in shares of stock. Some high-income people who lose a lot of deductions and credits are also going to be benefiting from large increases in their stock portfolios. So everybody's going to be better off. And if you live in a blue state where they have high income taxes and high property taxes, this bill is your only chance to have Democrats begin to take those tax rates down.
We'll see if that actually happens or whether people are incentivized to move out of some of those states. Grover, thanks. Good to see you, Grover Norquist. Thank you, sir.
Take care.